Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data coming out of the European side across the pond. We got final CPI, Consumer Price Index, came in at negative 0.2, which was right in line with expectations, and core CPI came in line with expectations at 0.7%, so that was right in line. The other thing that we had were crude oil inventories here in the United States came in as a 1.3 million barrel build. It was expected to draw down to 3.1 million barrels. Another build, basically, Kuwait's back online and Iran has not turned down the spigot and is where they were before the sanctions against them were put on. So that is really pumping out some oil. Despite that fact, oil is cruising higher at $39 a barrel. We are right at the value area high right here, which is going to act as a major resistance area. If we settle above basically $50 a barrel for the most part, it's looking like it could easily go up and trade into the 60s, which is this area right here. That is the next resistance area, or magnet, if you will. And we could see some very back and forth between 50 and 60 to fill in this little gap here. So that is going to be a real major point of contention between the bulls and the bears. So like I said, we settle above 50. It's looking like it could easily push into the 60s. All right. If it goes up and settles into the 50s, comes back down and settles somewhere in the 48s, then it's going to look like it's going to go back down to this value area. So that's the way that market is shaping up. Onto the NASDAQ/NQ. It's also rallying off of basically oil for the most part. There was a bit of a disconnect yesterday, but today NASDAQ is pushing back higher. As you can see, we're starting to build out this bell curve here and could easily start looking to fill in this area and create a nice big bell curve along there. I've talked about it many times. It looks like the equities are going to start trading sideways for the foreseeable future. Yesterday there was a bit of a fit because some of the Fed governors were saying that the Fed was on pace to raise interest rates at the next meeting, so we'll have to see. The markets tried to throw a little bit of a tantrum yesterday, and that's why the markets were down. On to the E-mini S&Ps, as you can see here, /ES. One interesting thing of note, if you remember, the point of control was up here at around 2075. Now, this isn't the volume, this is the time spent area has separated. So there's been more time spent right here at this 2045-ish area, and the volume has been traded up around 2075-ish. So that separation is pretty interesting, that there is not a lot of volume down here, although the market seems to trend sideways. When we use this as Stoudemire, we never really used the volume. It was all about the time spent there for the most part, and that is starting to gain acceptance at these prices. So that is interesting to note. We could start seeing a lot more volume at this area, which is in line with that whole trending sideways theory that I have with the equities. If we look at the E-mini S&Ps breakdown on a 15-minute chart, this, as the market opened up, we basically just kind of rallied off the bottoms there, and have been trending sideways now. It's just a pretty quiet day, not a whole lot of market data coming out, and not a whole lot of information. A lot of people probably waiting on the FOMC minutes that are supposed to come out in a couple of hours. On to some trades that I've done. This Twitter thorn in my side that I have on, I basically had on the May 21 puts, and so I rolled my May to the June 21 puts, and I collected another 5 cents for that. So not a whole lot to reduce that cost basis, basically because they're so deep in the money. There's not a whole lot there of extrinsic value when you get that far deep in the money. So I decided to get a little aggressive and spend that 5 cents that I collected and rolled that into some June 20 puts that I bought for 5 cents. So basically spent that credit that I received. So I didn't lower my overall cost basis, but I just looked at it like, you know what, a nickel's not really lowering my cost basis. Let's get aggressive with that big nickel and buy some calls, and hopefully if we get a bit of a pop, those calls will really help me out, so I can lower my basis that way if I get that. Otherwise, it's just rolling for time and keeping that dream alive that Twitter will one day rally. My cost basis in Twitter is just above $18, so if I could just get a bit of a rally to this point of control, that will really make that look good. It may even come close to being break even, and I can cover that. So I don't have a whole lot of time, 30 days in that, but that's what I'm looking for Twitter. I haven't done anything in GoPro. GoPro is another one that's a thorn in my side. I'm basically long the 15 or short the 15 puts in there, which is right along here, but I've been able to collect about $3.20 over the course of this, which lowers my cost basis to, you know, right around that $12, $11.80, but it trading right around $9 is really hurting. So I don't know if I'm going to pull the Band-Aid off and just take my losses in this, or do a similar strategy like I did with Twitter, where I roll it out to June, maybe collect 10 cents, spend that 10 cents to buy a call, and hope for the best in GoPro. On to the earnings trades that I did in Target. I ended up looking at Target like the rest of the retailers, thinking that they were going to come out with worse than expected earnings, so I ended up selling some calls in there, and I did the May 77 calls, sold them for 32 cents, which is just what was just outside what the market maker move was predicting, and sold it, like I said, for 32 cents, bought it back for a penny this morning on that big drop, so did that right off the bat in the morning. And the other trade that I did was in Lowe's. Lowe's, just looked at it like, you know, Lowe's is like Home Depot. They basically have some of the same type of customers. Home Depot maybe a little bit more along the lines of the professional builder, where the Lowe's is really geared towards the retail or the do-it-yourself home fixer-upper, if you will, or flipper. So I still looked at it as, if Home Depot was doing well, Lowe's was probably going to do all right as well. So I went into the May and sold the 72.5 puts for 34 cents, bought them back for 3 cents this morning. So a couple of nice trades on those earnings ones. On to Friday, we are going to be doing on a front call ratio spread. So I've done a couple of those call ratio spreads already this week. Hopefully we can get a little bit of volatility expansion. If the market continues to move sideways, that likelihood is not very good, but needless to say, it's still a really good strategy to put on, because a lot of times you can create this, like with a call spread. We're buying a call spread, so it's neutral to bullish on that, but if we are directionally wrong because we're going to be collecting a credit, we could really care less, and we'll be able to keep that credit if we were wrong. So that's what we're going to be doing on Friday. So go to protraderstrategies.com, sign up for that. That's all I got for you guys today, other than if you can't take that, take it easy.